In this video, we're going to be talking about price action patterns, chart patterns based off of price action. And I'm going to be explaining the types of price action patterns that you can see on the chart. And first of all, we have to know what price action chart patterns are. Chart patterns are basically patterns that show up on a regular basis, on a frequent basis in the market that helps us to predict or try to predict where the market would go. Just the way people try to predict the weather through patterns that you see in the sky, through different um, confluences that help them predict if rain is going to fall or not, if the day is going to be sunny or cloudy. The same way it goes and the same way it works for trading forex. There are certain patterns that you might see in the chart that helps you indicate and helps you improve your accuracy, your prediction of what's going to happen in the market. Now, there are different types. There are so many types of price action chart patterns. There are so many types, but I'm going to be showing you the most important ones. So these are the main types of chart patterns that you're going to have to be looking for and be able to identify in the market. And these are the number one is, yeah, basically four, right? So number one is double tops and double bottoms, which are also called M and W formations. It's mostly called M and W formations, but they are the same thing. The second one is head and shoulders, upright and inverted. So there's the head and shoulders, which is the upright one, and then there's the inverted head and shoulders. That's just like the M formation, and the W formation is just the inverted M formation, right? So number three, we have the wedge formations. And then number four, we have the triple tops and triple bottoms. Now, if you don't know what these are, I'm going to be showing you what they are. I'm going to be showing you examples and drawing the diagrams and all that. All right. So let's go into the explanation. Now, the first one we're going to be explaining is the double top. Now, what are double tops and what are double bottoms? They're basically M and W formations. It looks like this. M, and it looks like this. W. Right. So this is your M and this is your M and this is your W. They call it double tops because this is a top. This is a top and this is a bottom. Sorry, this is a top and this is a second top. So that's double tops, right? So you have two tops. And then they call this one but double bottoms because this is a bottom and this is a bottom. So that's two bottoms. So that's a double bottom, right? I prefer to call it M and W formations because it's easier to say. Just say your M and W instead of saying double tops and double bottoms, right? So the way this works is if you have an uptrend, right? If you have an uptrend, you're gonna see this. This shows that the market is about to reverse, right? So if you have an uptrend and the market gives you this M formation or this W formation, what it basically means is that the market has gone to this high and then went to retest that high, came back to the high and doesn't want to go above this previous high. So this previous high is acting as a resistance. So it's resisting price from going higher, right? And the same thing goes for the W formation. We have this low here, this bottom, and then the market goes up and comes back to retest that bottom, to retest this low and acts as support, preventing price from going below this first leg, right? So this is called the first leg and this is called the second leg. Same thing, first leg and second leg of an M and W formation. All right, and then one thing to note about M and W formations is that these are reversal candlesticks. So these are reversal chart patterns that you might see on the market. They help reverse the trend. So if the market is going up and you see one of these patterns, if the market is going in a direction and you see one of these patterns, then it means that the market is about to reverse. So the second one we're going to be going over is the head and shoulders pattern, the upright and the inverted. Now, the head and shoulders pattern is very easy. It's just they call it the head and shoulders pattern because it basically looks like a head and shoulders, right? So imagine this is the person's head, and then this is the person's left shoulder and the person's right shoulder, right? So that's why they call it the head and shoulders because it looks like a head and shoulder, right? So this is a head, sorry, this is a shoulder, then you have your head, and then you have your shoulder. Now the inverted one, it would be like this. This is the inverted head and shoulders. The same thing. All right. So you have your left shoulder, head, and right shoulder. This is also a reversal chart pattern. It's also a variation of an M and W formation, but I'm not going to be going deep into that. But it's just surface level. So this also tells you that the market is about to reverse. What it means is that the markets. Let me just clear this. Yeah. So we have this high, right? And then the market breaks this high and goes all the way up here. And the market comes back down below this high that it broke, below this previous high, and then tries to go back up and can't go all the way up to this high, right? So price can't go all the way up to this high, right? There's a reason why it can't go back up there. And then the market then reverses. This is your head and shoulders pattern, right? When you see it on the chart, it's going to be clear depending on how you have trained your eyes to see it. If you've trained your eye to see it, you see this clearly when it happens. So your job is to sell somewhere in here on the second leg, because when you get this move, you're expecting the market to go down. When you get this move, you're expecting the market to go up. So this is your head and shoulders pattern, right? And then the next one I think is called the wedge formations. Now this one is also a variation of, in fact, you see all these patterns here from number 2 all the way to number 4. They are all variations of an M or W formation, right? They're just variations on the theme. Now, wedge formations. What are wedge formations? Wedge formations are usually called triangles. This is how it forms. You have price going in a direction, and then what happens is the market price begins to squeeze into a point, right? So when the price squeezes into that point like that, you have your wedge. How it usually forms is a series of highs and lows, where you have a high, you have a low, and then you have a lower high, and then you have a higher low, then you have a lower high, you have a higher low. This means consolidation. Then you have a lower high, and then you have a higher low, lower high, higher low, till it squeezes all the way into that point. So what you just do is you connect the highs, connect these highs like this, and then you connect these lows like this, and then the market will squeeze all the way to this point. When it reaches the tip of the point, you can expect the market to break out aggressively out of this range, out of this wedge. So is it that it breaks to the upside or it breaks to the downside? This is your wedge formation. And then there are different ways of trading this, which I'm not going to be going over, but this is your wedge formation. Some people they trade the breakouts when the market breaks out of here, or when the market breaks down here. They buy and sell because they expect the market to continue in that direction. But there are different ways of trading this wedge formation. I'm not going to be going into that in depth. And then the fourth one is your triple tops and triple bottoms. Now, triple tops and triple bottoms, they're just M and W formations with a third leg. So if you have your M like this, and you have your W like this, a triple top and triple bottom is just when the market gives you a third leg like this. Then here too, also the market gives you a third leg like this. So this is your triple top and this is your triple bottom. You have 3 tops, 1, 2, and 3. And then you have 1, 2, and 3. This is your triple top and your triple bottom. It's the same thing as an M and W formation. It's the same concept that price refuses to break above or below that certain point. Price refuses to go above here, and price refuses to go below here. And when you see that this is acting as resistance and this is acting as support, and then you expect the market to reverse all the way down if it's a double top, or if it's a triple top, and then all the way up. All right, so those are the 4 main types of chart patterns. It will be helpful for you if you look for these things on the charts. Look for them on the chart. Try to identify them on the charts. And if you found this video helpful, click the subscribe button, click the like button, and I'll see you guys on the next video.